Community minded, just like you. BTC Bank.
Hello and welcome to the Alpha Ag Summit. We first want to thank you all for attending on whatever platform you're streaming this program on. Our panel discussion for this one will be focusing on the current state of the financial situation in agriculture. And it's brought to you by BTC Bank, community-minded just like you. Go to btcbank.bank for more information. As we'll get an update on the financial picture for 2021 and also throw in some discussion concerning the Paycheck Protection Program and how that's affected agriculture operations. Now let's introduce our panel for today, and we've got a pretty diverse panel. First off, Shane Haynes is the president and CEO of Heartland Tri-State Bank in Elkhart, Kansas, and president and CEO of Elkhart Financial Corporation, a bank holding company. In 2008, he was promoted to the president and CEO position of First National Bank of Elkhart. December 1st of 2017, the bank completed a charter change to convert from a national bank to a state chartered bank, which was named Heartland Tri-State Bank. In September of 2011, he put an investment group together and purchased the bank from its former holding company. He has served as the president and CEO of the bank and holding company since inception. Also joining us on the panel, Jared Fisher, Assistant Vice President and Ag Loan Officer based out of the Bay City Wilder office. Jared grew up in Unionville in Michigan and went on to Northwood University to graduate with a triple major in automotive marketing, banking, and finance and management. He currently resides in Essexville with his wife. Outside of work, Jared enjoys farming with his family on their cash crop operation in Unionville, running road races, traveling, and spending time with friends and family. And Philip Durbin is Vice President and Loan Officer at BTC Bank in Bethany, Missouri. He is extremely passionate about contributing to agriculture and his community through working in the finance industry. His passion stems from his involvement in FFA and FBLA, growing up in Paris, Missouri, and his time at the University of Missouri majoring in agribusiness management. Philip and his wife Amanda currently live in Gallatin, Missouri, where they raise two boys, Ian and Grant. Along with spending time with his family, he enjoys the outdoors and exploring the rivers of southern Missouri and northern Arkansas. Philip has worked in the ag finance industry since he was 15, helping farmers plan to meet their financial goals through sound financial plans. Most recently, has helped spearhead the PPP loan program for all of BTC Bank. Now, before we begin, we remind everyone that the views and opinions expressed on this summit are not those of Alpha Media and do not represent the viewpoints of Alpha Ag Network stations, their farm directors, or management. This broadcast is protected by copyright law, and credit should be given whenever sharing or reposting of this video. And once again, if you are watching, you can go to alphaagsummit.com or any platform. Just click on the chat, and if you have a question, we have one of our colleagues, Dwayne Murley, with KWMT in Fort Dodge, Iowa, who will be screening those questions, and we'll pop that up when the need arises. So before we get to the questions, I'd like to hear some opening comments from each of the gentlemen. So let's first start with Philip Durbin with BTC Bank in Bethany, Missouri. Philip, thank you for joining us today.
Thanks for having me, Greg. BTC covers 13 branches throughout Missouri and southern Iowa, mainly focusing in ag, and it proved to be a pretty interesting year in 2020, as you've been hearing. Overall, our area has been pretty fortunate. We avoided the major weather events such as the drought and the derecho up in Iowa. So if you look at great weather patterns, led to great yields, and with the great prices that we've been seeing, our farmers were pretty fortunate. And when you toss on PPP loans and then the government subsidies, things turned out pretty well for our farmers. And in turn, that turned out pretty well for the rural banks in our area and for us as well.
All right, Philip, thank you very much. Now let's go to far southwest Kansas as we hear the opening comments of Shane Haynes with the Heartland Tri-State Bank in Elkhart, Kansas. Shane, thank you for joining us today.
Thank you for the invite, Greg, and it's a pleasure to be a part of your summit. Just a little bit about our bank. We are the far southwest corner of Kansas. For us, annual rainfall is about 16 to 18 inches a year. So drought is always a major concern for our farmers. We're a small $140 million ag bank with 4 different locations spread out southwest Kansas into central Kansas. Very heavily loaned with ag borrowers. Our market niche has been the smaller mom and pop sized operations, where almost 70 to 75% of our loan portfolio resides. A little bit about me personally. My passion for rural communities, for ag, but also just small communities. Our bank is owned by some local shareholders that came together to keep a bank locally owned. And then a couple of years ago, we made an acquisition. I grew up on a family farm, understand the challenges of a family farm, the unique lifestyle, the opportunities that it also provides. So I come with, it's easier to communicate with your borrowers if you feel like they feel like you've been in their shoes. So I think this summit is a great opportunity for individuals to come together, share ideas, learn from each other, and just thank you for allowing me to join your program.
Shane, thank you very much. And being here in Kansas, it's always fun to find where locations are. And in this case, I did get a geography lesson today as we talked with Jared Fisher with the Thumb Bank and Trust based in Bay City, Michigan. Jared, I appreciate you joining us today.
Hey, happy to be here. And like I was telling Greg, like every good Michigander, when he says, where's Thumb Bank located? I said, well, you pull up your handy map of Michigan and we're in the thumb. So when you pull up your hand and show it like Michigan, where we cover the thumb region and then into the Tri-Cities here. So just a little bit of background about our bank. We're just over $300 million in asset size and just celebrated our 125th anniversary last year. So our celebrations were cut a little short due to the pandemic, so we didn't have a lot of the celebrations that we would have liked to have. So I think we're going to have to do a 25+1 celebration this year now that we can have some people back into the bank. But in our neck of the woods, we've got our normal crops, like a lot of the people out there grow corn, wheat, and soybeans. But then we also get into some specialty crops. So our region specifically has a lot of dry beans. We see some beets in our area, sugar beets, and then also some pickle and other fruit crops. So we have a little bit more diverse spread of agriculture here. And I know we made some national news with some dams breaking due to some heavy rain here last May. So, I mean, weather was we had heavy rain and then drought. So it was a pretty interesting year. But all in all of our farmers had a pretty decent year and were able to weather some of these events due with, having some good drainage, good risk management, and then also some of the government help that's come in. So hopefully we can be of assistance with people learning more about the PPP program and talk a little bit more about our future coming up in the financial world.
All right, Jared, thank you very much. And he's exactly right. If you look at it on a map where his location is, it does look like a thumb. So that's why they call it that area. All right, let's get into the questions. And once again, if you are out there watching this and you do have a question for any of our panelists, you can go to the chat portion of wherever you're streaming this at, type in the question. We do have a screener, Dwayne Murley, who will monitor the questions, and should the need arise, we'll bring up those questions from the audience as well. All right, Jared, I'm actually going to start with you on this. Even though COVID-19 and the havoc that it wreaked during the early months of the pandemic, none of the forecasts for the ag economy were optimistic if you go back to that time. So fast forward now, was there anything that surprised you with regards as to why we now have a much stronger outlook as far as the U.S. ag economy?
The surprise has been I've had a ton of growers that we were getting into fall, and we've fretted about prices from the start of COVID all the way to August, and we start getting yields out of the field, and they were decent, and everybody's saying, "Hey, we got to sell off the combine because this is some of the best prices we've seen." We had few and far between guys who did have bins stick stuff in the bin because they thought, "Yeah, we'll take a chance," and those guys are pretty happy guys because we've seen the run up in prices from September till now has just been I think if anybody saw this coming, they positioned themselves to really benefit from it.
Shane, let's go to you. Out in the southwest part of the state, how did you look at it as far as what we saw with what we looked at in the ag economy in 2020?
Yeah, I would agree with Jared. Adding a buck to $3 and $4 corn and Milo wheat, that's a 25% increase, and so I don't think anybody saw that one coming. For us, and I think a majority of Kansas would agree, the summer crops weren't good, and so we were behind the 8 ball already a little bit. So we needed strong fall crops. Depending on where you're at in the state, moisture was kind of spotty. So some did have good fall harvest anyway, but you add a dollar to those ending prices, that made a huge difference. Of course, then you throw in the government CFAP 1 and 2. I would say for our area, probably the group that struggled would have been the cattle guys, especially if they sold cattle, were kind of forced to sell cattle in that March when COVID really hit, and we had production like the Packers weren't able to move beef out, and so we had some guys move $200-300 a head. Now, fortunately, most of those could carry them through and put them in the yard or do other things to kind of buy some time, but we had some guys coming out of the yard at the wrong time, and so the cattle guys are a little bit behind. The grain guys came out okay with the price increase, and then of course the government assistance.
And Philip, for you, as you look at the area that your banks represent in Missouri, how do they look at it, and what's been the discussion concerning the ag economy?
So things have been pretty good for us around here. Like I said, we've kind of missed out on the weather events, had good timely rains. Things have been generally good around here. What's really kind of propped everything up and given everybody an extra shot in their arm was the government subsidies that we've gotten, as well as the PPP loans. That's just been icing on the cake kind of for everybody around the country. If you were struggling, you received that government money, and the PPP loans help get you through those times. And if you had a good year, you were able to build up some working capital through those government subsidies and the PPP loans.
All right, next question, and we'll start with you, Shane, on this. As we talk right now in the first quarter of 2021, what do you see, which industries do you see are better positioned right now?
We're in the middle of renewal season right now, and when you add a dollar to corn and milo prices, that helps with cash flows quite a bit, and that's kind of been the challenge, I'd say, for the last 2 or 3 years, is that they didn't necessarily have a operating loss. They didn't necessarily, they made earn net worth progress. A lot of times it's come at the expense of working capital. Those cash flows have been a challenge. Well, you add, buck to those corn and milo prices. The guys with the lower break evens, with the higher projected federal crop insurance levels, they're able to basically lock in or guarantee at least a break even with just crop insurance and decent yields, decent APHs. So our caution, our concern, I guess, is just don't get held or led into a false sense of security. Be proactive like they have been the last several years, taking advantages of market rallies. Just because we've increased the price doesn't mean it's going to stay or hold. But I'd say the best position commodities right now, definitely the corn milo guys.
Philip, how about you guys in Missouri?
Absolutely. Same sentiment as Shane. Row crop guys are really well positioned right now. They're seeing input prices go up a little bit. But as far as locking in some good prices, good profitable prices for this fall, it's definitely a good opportunity for them to make a little bit of money, lock in, like you said, those break-even prices, and everybody in the row crop industry should be pretty well prepared for this year.
And Jared, as you mentioned, it's a different mix, a more diverse part of that up there. How do you look at it of the industries up there as to who's got the biggest benefit right now?
Our commodity row crop guys are pretty well suited right now. One thing that it does do is the specialty crops have to make their bids competitive because, if you're a dry bean grower and dry beans are $30 and you can grow $12 soybeans, you really start having to weigh the pros and cons of growing dry beans. So, we've seen some of the specialty crops have to up their bids to compete for acres when corn and soybeans are at the level that they're at right now.
Philip, let's go to you for the next question, or let you start on this as well. Okay, so we see who's benefiting or which sides are positioned better. Let's look at the other side. What significant risks are still out there?
Sure. So the loss of government payments is a big one to me. We saw a huge uptick in that in 2020, and you can't expect that going into 2021. Price reduction is also the big one. Prices are awesome right now, and if those prices go away, that can really hurt people since input prices are going up. Cash rent's probably going to go up. Land prices are going to go up. So with those risks, there's a real chance that if prices drop and we don't get government subsidies, then farmers could struggle this year. So those are some major risks that people need to be prepared for.
Jared, how about up in Michigan?
We've talked about cash flow, and it's nice to be able to project big numbers on cash flows right now. But for those to turn into a successful year, we've got to sell the crop for that. So, to echo what Philip said, it looks good right now, but guys aren't, and people can forward contract, a portion of that. But until we get the whole crop and have a normal year and sell at those prices, there's always risk on the table.
And Shane, Southwest Kansas, or the customers you have out there, what's the biggest significant risk that we see?
I'm not disagreeing with the other gentleman that they're correct. We're still worried about COVID, frankly. I know everybody's tired of talking about it, and so am I. But it's still controlling our economy. If these vaccines continue to roll out, continue to be effective, we can return to some normality. It's just I've never seen a time as both producers, as bankers, as a country, where we've made so many short-term decisions. We're not planning 3 to 5 years down the road, and we're not looking at this operation. We're not looking at whatever that operation might be 3 to 5 years down the road. We're worried about daily positive test results, quarantine shutdowns. And so from the ag side, COVID created a major supply chain disruption. Grocery shelves were empty due to packing plant closures. Hamburger, you can have bucks a pound if you can find it. And so I'm praying that we don't have another COVID disruption because I'm afraid there are all kinds of other players in the market. Some of these lab raised meats. I was reading that broilers can be brought to market in 6 days. Well, if there's a shutdown somewhere for some broilers, there's other alternatives. And so that I'm still, I guess, stuck on COVID, and then of course administrative change and what that might entail.
I want to follow up to that as well because of the areas that you all represent. And Shane, I know the small town feel growing up near Elkhart, but you take as long as it's been and what it does to a small town and what it does to the businesses within that small town too.
You're exactly right. Fortunately, our small town rallied around our businesses. There were some state level programs that gave these guys some assistance. Some of these smaller businesses. PPP was a huge part of that. I personally made a $413 PPP loan to a little bitty nonprofit, but that's what they qualified for. And to this day, we have not lost any businesses in any of our communities that we have a bank, and I'm proud of that. That I think the bank was a part of that, but the community stepped up and banded together to help those businesses.
And Philip, kind of the same for you guys in that north central Missouri area, the areas you cover, a lot of small towns up in that region.
Yeah, and it's been really surprising to see how COVID has affected our communities, because out here in the rural areas, things haven't changed quite as much as they have in the cities. We haven't shut down towns completely. There's been a few businesses that had to shut down for a little bit, but in general, these smaller ag communities have been pretty resilient to everything, and I think that's what's awesome about agriculture is people still have to eat, and so that's our job. Fields aren't going to get planted. Fields are still going to get planted even though there's a global pandemic. So that's what's been really cool to see is even though there's some tough times out there, the agriculture community has been extremely resilient to everything and has stuck by their business counterparts within the local communities. And like Shane said, PPP loans have been huge for these rural communities. Everybody's gotten a little extra shot in the arm, help get them through these tough times, and it's been enormous help.
And Jared, up in the thumb of Michigan, what have you seen up there throughout, literally 1 year ago up until now?
A year ago, we were talking about low prices and how 2020 is going to be better than 2019 because 2019 was a late wet fall and everybody struggled to get their crop out of the field. And within 2 weeks, it was we're doing Zoom meetings with customers. We're calling people on the phone because everything's locked down. So, something that we just did not see coming, all of a sudden forced our bank personally to grow leaps and bounds technology wise. So, we went from being everything coming face to face to being able to do everything digitally in about a month period bank wide. So just the jump in technology, and a lot of businesses were doing the same thing. But, we've seen a lot of through PPP, a lot of our local businesses end up, that was the life raft that they needed at the time. And then communities rallied around them. Our restaurants were shut down for, it was 6 weeks or 8 weeks. Just recently, they started opening back up at 25% capacity. And we're seeing restaurants that had as good or better year in 2020 than they've ever had, just because of the community support of people still doing takeout, still ordering stuff delivery. So it's as scary as a time that was. It's nice to see the communities rally around some of these small businesses.
All of you have mentioned the benefits of what we've seen for the PPP, the Paycheck Protection Program. And Philip, I'm going to start with you on this, but let's look at it as far as individual farmers are concerned as well. There have been issues that looking at it as, for LLCs, for farm partnerships, why aren't they involved or why can't they get one as well versus the sole proprietors? And I know you guys are much more in tune to what we have seen and what the program is entailed to do, but yet still some of the issues that are out there. So, Philip, just some of your thoughts on that and what we have seen from Congress and how that's evolved through 2020 into the early part of 2021.
Yeah, so the main thing for farmers is it's been on an individual basis. So if you file a Schedule F individually, you qualify for it. LLCs, corporations that are farming entities that are set up those ways have kind of been left out. They've been able to cover their wages, and that's about it. A little bit of pass-through income, but not much other help. So it's really been interesting to see how they selectively did that for individual farmers. And just because you may have structured your farming operation in a certain way, you kind of got left out. And we've seen a lot of that. Hopefully they're changing that for the small business owner right now. I think those changes go into effect March 1st. to help get them a little extra money because of the way they've changed the calculations. So that'll help a lot of the rural communities, especially a lot of ones that are sole proprietors that operate a business, file a Schedule C, but don't pay wages because there's, maybe they're the only worker there or something like that. So hopefully they get those changes fixed and can provide a little extra boost for them.
Jared, let's go up to you. Like you said, of the diversity, you have agriculture in that area. How has that affected that individual farmer versus partnerships or LLCs?
We have a lot of people that some guys are a couple brothers and they each farm together and keep stuff separately, bookkeeping wise. We have people that form LLCs. So, one of the tough things with our job is you go through the rules and say, the person who has an LLC and nobody takes a wage, you're not eligible, but the people who farm the exact same way with the exact same acres and just in a different format can qualify for 2 loans individually. So, just some of those things where, and people have set things up like that for different reasons. And, going with the recent changes back in January, we've had people go into their accountants saying, how can we structure things to get a PPP loan? And it's like, guys, we don't want you to come up with a tax burden to get a PPP loan. I mean, you need to do things that make sense for your operation. And if it works out that you can qualify for this, great. And if not, you have other benefits for the way you were structured, and you've probably reaped those in the past. So just kind of working through issues like that.
And Shane, Jared brings up a great point concerning the tax burden or potential of the tax burden as well.
Yeah, I was kind of laughing with Jared's answer because we've had the same discussions with some of our producers, and you do kind of want to take a step back from all of this and say, wait a minute, this was a decision you made for your operation. It was your family structure, the way you had it set up. I'm just a little bit sympathetic for everybody in this process, from SBA all the way back to Treasury. They were standing this program up. I made the comment one time that we were building the plane at 30,000 feet like we were going across the ocean, and that's not anyone's fault. I think SBA did their annual lending every 10 days with this program, and so there were just so many questions that were getting answered after the fact. And I think, in fairness to everyone, we happen to have a very good relationship with our SBA office, and they've been very helpful. But just trying to put all these answers into the box has been frustrating, and I completely sympathize with the farmers. But SBA has been trying to do everything they can to get as many people money as they can. It's just that's the way the rules were set up from Congress, and so they're limited to those rules as well.
A reminder, this portion of the Alpha Ag Summit is being sponsored by BTC Bank, community-minded just like you. You can learn more about our sponsors by going to alphaagsummit.com. We also remind you to register to win a 4-day trip to Sarasota, Florida to enjoy deep sea fishing with our friends at Double Nickel Siesta Key Charters. You have until March 25th, 2021 to register. Once again, go to alphaagsummit.com and to view any or all the sessions from the Ag Summit and enter to win that Florida fishing trip sponsored by BNS Equipment. Shane, we do have a question that is directed towards you, as a matter of fact. Let me bring that up here. And this is in Kansas. The former Abengoa biomass ethanol plant built in 2014 just to the north of the Hugoton area, which is just to the east of Elkhart, to get bearing straight, was not successful processing corn stover. The question is that $500 million plant now having any secondary use or success?
Yes, it has. It went through a couple of owners through that when they sold and went through, I think there's maybe even bankruptcy in there. It has now been bought by Seaboard Farms or Seaboard Foods, and they are going to use it as a biodiesel. They're going to convert it, not use corn stover, use the traditional corn wet corn, just that sort of thing, and they're going to use it for their own enterprises. I don't know that it's up and running, producing. It may be, but at least it's being put to use. And for our area, Seaboard's a huge employer and a huge part of what we do. And so I think that was a great opportunity for them and for the area to keep people employed.
All right, Jared Fisher, I want to go to you to the next question. We haven't talked about interest rates yet, and it's being described as historically low, which the numbers we have seen, I think, have proved that out. Do we expect that to continue for the foreseeable future?
I think so. Everything we're hearing, it sounds like they're going to try to keep rates low. But as I've been cautioning my customers, I said, we're hearing that rates are going to be this low for a year and farther out. But a year ago, we didn't see COVID coming to hit us like we did too. So you kind of have to take that with a grain of salt because we've seen major changes happen and they can happen quick.
Philip, how do you look at it from your perspective in Missouri?
Yeah, I think there's a chance that they go up sometime somewhat soon. The 10-year Treasury yield is up, and that's kind of an indicator that the price or the rates might go up. The Fed has indicated that they're still going to hold things low as long as inflation stays pretty low. But I'd say there's an actual chance that it does go up at some point.
And Shane, we haven't heard, or I haven't heard, Fed Chairman Jerome Powell mention anything as far as when or if they're thinking about it. But how do you look at it from out in Southwest Kansas?
I'm kind of looking at it from a little bit of a bipolar perspective. I think the short term, the 1 to 3 year, the Fed's been very direct that they are going to keep rates low. That statutory change of changing it from a 2% inflation target to an average of 2% over the long term, I think was a pretty substantial step by the Fed to say that if inflation does go up a little bit, we're not going to worry about it. If it goes over 2, we're not going to worry about it because we're looking at an average over the long term. And so I think from the Fed's perspective, the short term, which they do control, I don't see rates going up. Long term, however, to me is a little bit different guess. The Fed has proven through the Great Recession that they don't control those long-term rates. Supply and demand and market rates control those longer-term rates. And so, there's just this massive amount of money on the sidelines. There's opportunities that are going to start coming up. I think that's going to put some upward pressure on long-term rates. And while the Fed can control that through some of their buying of mortgage backs, they proved through the Great Recession they don't control long-term rates. And so a market-driven rate with the amount of cash that's sitting on the sideline and has been injected into the economy through COVID, I could see the long-term rate starting to move up. If I were counseling my bars, I would say to try to lock in some of those longer-term rates now while you can.
Well, as we look at the low interest rates, I'm sure for many producers, they're probably looking at, hey, is it worth maybe investing in or acquiring some land as well? So, Shane, I'll start with you. Are we going to expect, or do you expect in your area land values to increase in 2021?
For our area, land didn't go up much in value during the previous run-up. It also did go down during the Great Recession. It was very, very stable. So for our local area, the most interesting thing to me, previously, if farmers were in a position to buy ground and wanted to buy ground, they just bought it. If it was next to them, they just bought it. And through the Great Recession, what we saw were producers started making a quality decision, not just a quantity decision. And so if the better irrigated, the better dry land, the better grass pasture, you pick the type of ground you're interested in, the better quality stuff you sold for the same, if not more. But that quality factor came in. If it was weaker irrigation, if it wasn't a good grassland, That did drop 10 to 20%. And so will we see that return to a little bit closer? I don't know. I think farmers with prices low have to make hard decisions, and there was a return on investment. The biggest thing to me, and I probably be even a bigger deal north, we have Bill Gates, one of the largest landowners in the U.S. So we have these outside interests purchasing farmland, and so they're not looking at it at break even like a producer is. It's an alternative investment to them. It's a return. It's a return on investment to them as compared to the stock market or some other CD type return. And so that makes the fair market value of farmland hard to determine when you're trying to live on it and live off of it versus it's an investment and an investment alternative to stock market CDs. So that's been a market disruptor in our area.
Philip, let's go to you there in the Missouri area. How do you look at the forecast for what land values may be in 2021?
Yeah, I definitely expect them to continue to increase. Land prices tend to be more reactive than proactive. Everybody's going to be looking at the profits that we saw in 2020, and right or wrong, they're going to anticipate those to continue. And then a lot of what we're seeing is increased demand from non-farmers, from people from the city. We're close to Kansas City, Des Moines. We've seen a lot of people, now that they can work from home a little bit more, want to branch out and get away from the city. And that puts a lot of impact and a lot of increase to rural properties. Anything with a home and acreage is seeing an increased value right now and an increase in demand. It's tough to you put something out in the market and it goes pretty quickly. And I think that's going to translate over to farmland pretty quickly. People are going to see a return on that farmland and want to invest in that, especially while the stock market's high. Everybody's going to be feeling good about the money that they're making. So I think that's going to translate to higher land prices kind of throughout our area.
Jared, we hear a lot about land prices in our area, in the surrounding states. Michigan is not a surrounding state to Kansas or Missouri. So how do you see land prices looking up there for 2021?
We're seeing prices already start to climb. We've seen some land auctions that, we hadn't had an in-person auction in 3 years, and all of a sudden you have a couple pop up. And a little bit like what Shane was saying, there's a difference between the very good ground and the maybe not so good ground. And we're seeing that price-wise. The very good ground is going to bring a premium, and depending on how big the farm is that neighbors it, might bring a very big premium. If it's a smaller portion or a smaller parcel that you can't get big equipment in, that's a little lighter, you might see that down 25 to 35%. So, but those percentages might hold, but we're seeing both of those go up so far in the early part of 2021 here.
You are watching the Alpha Ag Summit. We're talking financial situation for agriculture in 2021, and we've got a great guest here that includes Shane Haynes, President and CEO of the Heartland Tri-State Bank in Elkhart, Kansas, Jared Fisher, who you just heard from, Agricultural Loan Officer with Thumb Bank and Trust in Bay City, Michigan, and Philip Durbin, Vice President and Loan Officer with BTC Bank in Bethany, Missouri. We thank BTC Bank for being a sponsor of this financial panel here on the Alpha Ag Summit. All right, Philip, let's go to you for the next question. And I saw this report and a survey in the Kansas City Fed, and with the higher than expected farm income we saw in 2020, in your area, Philip, what are farm borrowers planning to do with that extra income?
Sure. A lot of guys have used it to pay down debt, which is a good thing. They've taken it and put it towards their operating loan for 2020 or used it to prepay inputs for 2021. And all of this helps build working capital. When you have influxes of income that you didn't expect, it's great to see people building up working capital, and that's what we've seen a lot of people do in this area. Some guys have used it for other options, but for the most part, using it to pay down debt or build up cash to help out working capital is what we've seen across the board.
Shane, what have your customers, how have they approached that in Michigan?
In Elkhart, I think Philip told it. Some of them are taking this opportunity. That working capital has just been eroding over the last few years. And so some of them are taking opportunity just to kind of right size their financial again, which is great. I'll be honest, we've had a few that are maybe a little bit stronger financially. These machine equipment dealers are trying to move equipment, and they're making some pretty good deals. And so we've seen some whole farm rollovers of equipment and been able to take advantage of some great price cuts from the equipment dealers. The one guy, granted it was a large roll, but through the incentives and through the different packages, you basically got a free tractor out of. And so it depends on the operation. But I think Philip, for the majority of our producers, I think Philip nailed it. They're seeing this as an opportunity to get themselves back on solid ground and get some working capital back in their operation.
My apologies on that, Shane and Jared, because Jared, let's look at what we've seen in Michigan on that. What have you seen your farm borrowers doing?
To echo what the other guys said, I mean, we've seen a lot of line of credit pay down. The last 3 years have been a little bit sketchy weather-wise and income-wise. So to have a good year and some strong cash flow, to see guys be able to pay that line down. We have seen a lot of prepay of inputs. And then we have seen some equipment purchases, whether it be, hey, we're waiting on trying to trade a tractor to hey, we need to update some bin stuff. I mean, it's across the board. It's just been some added equipment to the farm, and guys are looking to see, hey, I might take 2 old tractors and trade it in on a newer one because it's going to make me more efficient. So the one good thing about having 3 down years is it really makes everybody push the pencil of what makes my farm most efficient and how can I stretch this dollar as far as I can.
Shane, I'm going to start with you on this question. How will macroeconomic growth prospects shape the ag market conditions?
This is going to be a very interesting time, I think. I like the macroeconomic approach. I kind of already mentioned it, this lab-grown cultured meat. While it's a very small part of the market, because it can be grown so quickly, if the consumer's demands change, that could be a major thing. I appreciate what USDA has been doing to explore some export markets. That's where the growth of our exports are going to come from, as these third world countries rise in economic status, want to improve their diets as a result. And so kind of getting back to where we started this thing is how quickly does COVID how do we get through this? How quickly do we get through it? And more importantly, how quickly do we get through it globally? Because as those other countries recover from the pandemic, recover from COVID, that's our exports. And so from a macroeconomic approach, I think we need to look at COVID and we need to look at those countries and how quickly they recover. Depends a lot on our markets as well.
Philip, your thoughts?
Yeah, I think a lot of it's going to depend on which direction the new administration pushes the markets that we're going in. Are we going to see an increase in renewable fuels and how that's going to affect the grain market as well as the livestock? I think that's going to be pretty much the major factor that I look at the macroeconomics because they have a hand in everything, and they're able to control the different aspects of agriculture. And so depending on which way they go on several different issues, that's gonna play a big role in it.
And Jared, that's something we don't know as of yet as far as where the administration may go, but factoring that in, how do they look at it, and how do you look at it for 2021?
Exports in our area, I mean, that's how the U.S. prices are getting driven higher as export wise. So macroeconomically, I mean, we have to see other people buy our products to drive that price up. Shane mentioned the lab grown meat. I find it funny that the people who want to make sure everything's organic and are scared of GMO are the ones who are also turning around and buying lab grown meat. Does that make sense? I don't know, but consumer trends, we've seen a lot of growth of the organic market in our neck of the woods because a family farm who wants to try to have 1,000-acre farm with a dad and 3 or 4 kids, the prices of conventional crops aren't conducive to do that. So they're looking for different markets to move to, and the organic space has made them a nice little niche farm. So they've also seen their run of interesting exports because we hear a little bit of the hey, there's organic stuff coming from other countries. Well, is their organic certification the same as the U.S. one? Hard to tell. So the macroeconomic world is in agriculture. It's everything.
Shane, I want to start with you on this question because we haven't had a chance to really dive into it concerning the livestock sector, what we saw in 2020 and, where they're at as we're into the first 2 months of 2021.
Yeah, I think it depends on what percentage of your operation depended on livestock. If you were mostly livestock only, you didn't get the CFAP 1 and 2. You didn't get as much. The PPP may not have been that helpful for you, depending on your type of operation or just limit of size of how much monies you were eligible for. So the livestock sector for ours is probably the one that we are most worried about. Again, if you happen to have some cattle coming out of the lot in March, that was a really bad timing that you just could not control. Fortunately, the price did rebound nicely, and so we've been able to sustain most of those operations. We had guys go to the feed yard that never gone to the feed yard just because they didn't want to sell in March, April, May. And so livestock operations in our area, at least, are a little bit different. They have to be a little more conservative. They can't handle the debt to asset that a row crop operation can handle. And so they're naturally more conservative, even in expansion, because they just don't have that just sheer cash volume available. And so as we kind of look through those operations, I think they're going to be okay, but they did not have that great year that some of our row crop guys had.
Philip, let's go to you. Looking at the livestock sector there in Missouri.
Yeah, same way with Shane. The livestock guys didn't see this huge jump in price that the row crop guys did. So if you were strictly livestock, you probably still made it, but you didn't see the huge profits that a row crop guy did. Fortunately, most of the people in our area have a little bit of both, so they were able to kind of get the offset with the row crop. PPP has helped quite a few of those guys out, like Shane said, if they were structured correctly. So that's been an extra little boost to help them out. So it's been interesting, but luckily most guys have been able to weather the storm, and hopefully better times are ahead.
Jared, obviously, in Michigan, you don't have the numbers, on the cattle side of the ledger there in Michigan itself, but for your customers that are livestock producers, how have they handled it through 2020 and here at the start of 2021?
Our guys are kind of like Philip said. The cattle is part of a more diverse row crop operation, so they might not have to rely on just the income off the cattle. So they've been able to, use the high cattle prices when crop prices were low to offset some of those downturns, and then now the row crop prices are high, so they're not getting adversely affected at the lower cattle prices. One thing that we've seen is there's been a lot of guys who had started doing the freezer beef stuff back when COVID started. They've turned a small little niche business into a pretty good, nice little cash side gig for them. We've seen a lot of the just local processing places. I think right now, if you try to take a steer to a local butcher, you're talking 2022 because they're so booked up. So, just some of the stuff that you thought, man, it'd be nice to go to a county fair and get a steer butchered. That I don't know how that's going to happen this year, but I hope that those people can add some capacity, because it's nice to see some people dealing with local farmers and then learning a little bit more about where their food comes from. And, some of the, Bay City is not a huge town, but you'd be surprised at how many people don't deal with a local farmer that just go to the grocery store and buy their meat.
I'm curious about something. How has for the farmers who grow fruit, obviously Michigan known for the production of Bing cherries, but other fruits as well. How have they weathered 2020 coming into this year?
Fruit wise in our neck of the woods, we do a little bit, but that's more west side of the state. I think they've been okay. One of the main issues that we've run into with them has been they deal with a lot of migrant labor. And so that's been a toss up with COVID. I mean, just trying to space people out, trying to house those people, trying to find spots to make sure that everybody can stay safe, have the PPE that they need, get tested when they need. I know there's been some issues with that, but I think it was a very big learning curve when they started, and I think they finally caught stride towards the end.
All right, Jared, I'm going to start with you on this question, and as we start to wrap this up, it seems every year you hear risk management. The importance of risk management. Boy, it seems to just magnify every year, and with the situation the way it is, yes, financially they're better off what they had in 2020, but you take out the government programs or direct payments in this case, risk management seems to just magnify every year.
Risk management is the name of the game, and if you're going to be a good operation, you have to have it. It used to be if you were farming 20 or 30 years ago, you could have a bad year, and the dollar figure wasn't the same as it is now. It was a $10,000 loss 30 years ago is now a six-figure loss, and you can't have a 2-year downturn and unless you're extremely financially strong and be able to weather it. So, I mean, I would say our normal farmer has more tools to do it now, and is doing a better job to do that, whether it be crop insurance, whether it be using options to hedge prices, forward contracting, just all along the gamut. So, I mean, our guys have, with having a couple down years, have figured out what works and what doesn't. And, you hope that every year when you're spending money on that stuff that it's going to pay back. But some of it, you hope that you pay the money for your crop insurance. You don't see any dollars of that back because it's coming back to you in high dollar commodities.
And Philip and Jared bring up a great point. With the grain prices the way they are right now, boy, there are a lot of great opportunities to get some of that forward contracting done.
Absolutely, and you got to be taking advantage of that. Risk management is extremely huge. Like you said, it seems to get more important every year. Well, the downside this year, it's huge. Everybody's looking at those prices right now. Well, yeah, they could go up, but they could also go down. And if they do go down, we could be looking at some farmers in some pretty rough situations, especially as you see land prices go up, cash rents go up, inputs go up. That could force some farmers into some consolidation issues. So risk management right now is, like he said, it's the name of the game, and it's extremely important to be looking at your risk management practices and trying to lock in some good prices while you can.
You know, Shane, Three Dog Night had it right. What goes up must come down. And but you don't have to go in the too distant past to see that happen as far as high grain prices then just absolutely hit rock bottom.
Yeah, I really appreciate what both Jared and Philip said, because that's our thing. That's my passionate thing for producers is risk management is the number one deciding factor on the success or failure of operations in my almost 30 years of ag lending. It's to me the single most important management tool in that risk management area is knowing your cost of production, knowing your break-even price. I really think that is the key. Most commodities, grain commodities have $1 to $1.50 trading range. It's been proven that 80% of farmers sell in the bottom 1/3 of that range. And so our goal is to keep our guys out of that 1/3. We want our guys to know 4 numbers. We want them to know the high and the low of the trading range so far, because that's going to give them a pretty good idea of where things are going to go, especially if you've already seen that dollar trading range. So if you know the high and the low, you know the current price, and you know what price you need, and that's the key number. If you know your break-even price, you can be a good marketer. You can take care of risk management for your farm, and so I'm passionate about that. It's that you're never going to go broke taking a profit type of mentality. I think what Philip said, it's this year with the run up, they're all scared they're going to miss the next run up. And we've been preaching to our guys, set up your plan at renewal, figure out what you're going to do for the year, and then stick to it. Don't change. Just continue to sell a little bit as you go along. But man, take a profit when it's there, and don't second guess that, especially right now.
All right. Shane Haynes, President and CEO of the Heartland Tri-State Bank in Elkhart, Kansas. We appreciate you being on the program today.
Thank you very much. Appreciate it.
As well as Jared Fisher, Agricultural Loan Officer with Thumb Bank and Trust in Bay City, Michigan. Jared, I appreciate it. Thank you.
Well, thank you. It's been a pleasure.
And Philip Durbin, Vice President and Loan Officer at BTC Bank in Bethany, Missouri. We appreciate you joining us today.
Thanks, Greg. I appreciate the time.
The Alpha Ag Network, along with our sponsors, are proud to bring you this Ag Summit, and a special thanks to our presenting sponsor, Hitchpin. The views and opinions expressed on today's panel are not those of Alpha Media and do not represent the viewpoints of Alpha Ag Network stations, their farm directors, or management. This broadcast is protected by copyright law, and credit should be given whenever sharing or reposting of this video. Alpha Ag Network is local farm programming, promoting and celebrating and respecting the industry that drives our communities, agriculture. Coming up next will be the conservation panel. We've got some distinguished guests on that panel coming up. Our producer has been Shayla Reilinger, along with my colleague Dwayne Murley. I'm Greg Akagi. Thank you for joining us on this portion of the Alpha Ag Summit.